Joining me now are Nancy Tengler, Chief Investment Officer at Laffer Tengler Investments. Alan Boomer is Chief Investment Officer at Momentum Advisors. And Julia Coronado is the founder of Macro Policy Perspectives. Welcome to all of you. Nancy, first to you. How much of the jobs number, the kind of stronger, the better numbers that we've seen on that front in the sort of so far this week, how much of that's already priced into the stock market? Because it would seem like the answer has to be almost 100%.
Yeah. Well, Kelly, thanks for having me. Listen, we saw the futures move up on the news this morning, but I think what's driving this market at this point, we're up 48% off the lows. What's driving it in our view is liquidity. I mean, you're still seeing 4-to-1 investors put flows going into bond ETFs over equity ETFs. Money market accounts are up $1 trillion in the last 6 months, and we all know that M2 is up 25% year over year. So every time we start to get a sell-off, you see buyers coming in and driving the market further, which is not to say it's not based on fundamentals, because I think earnings season was better than expected. And the guidance that's being provided when it's being provided is pretty good. So I'm optimistic. I think we need a correction, which is just a correction. But I also think that this rally could have legs. And we wrote a piece with that title a couple weeks ago. And
that's a good point about the money supply. You know, with M2 up 25% year on year, that's a powerful boost. Alan, do you think the gap between Wall Street and Main Street, so to speak, is closing with the latest economic numbers?
Today's number, it was good. I mean, it was a good number. I think, ironically, the market is selling off a little bit today because, you know, when the numbers are good, when the data is good, that means that the stimulus that comes in the next round might be a little less. I do think the market has gotten well ahead of the economy, although I do agree earnings have been strong. Revenue, has been strong for public companies. It's just that I think the market is pricing in a very rosy V. You know, I think they've priced in a vaccine. I think they've priced in that the vaccine will be widely accepted and used. I think the market's pricing in school openings going smoothly. So I think, again, there's a lot of optimism that's priced into the market that makes me a little nervous today.
And that's why you're avoiding airlines, energy, banks, sticking with some of the big tech names I know. Julia, let me turn to you with the same question about how you see this economy progressing. As you just heard from the Labor Secretary, he thinks it's all kind of going along more strongly than we would have realized, even through July. Is there a risk that we see a big sea change in August?
The risk is definitely tilted in that direction. It was a solid report for July, but it was a loss of momentum as well. And if we look at the sectors that saw the biggest loss of momentum relative to June hiring, they are the sectors most exposed to social distancing, most impacted by the resurgence in the virus and the renewed restrictions and the slower pace of reopening. So we're still very much in the thick of this. Some of the high-frequency measures, actually one tracked by the St. Louis Fed that predicted today's number very well, is pointing to flat or a slight decline in August so far. We've only got a couple of weeks of data. But, I think that the risk is definitely tilted towards this loss of momentum.